The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 7th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. I want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Well, you can't pick up that phone just yet, but what you can do is you can send me an email. Send it out to steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Now, folks, first, we are recording the show between 8 and 9 this morning. So if you're listening from 11 to 12, thanks so much for doing that. I'm going to make the show as pertinent as I possibly can for that hour and what to be able to look for. But, of course, if you are listening between 8 and 9, please, by all means, go ahead and send me an email, steve@tfnn.com, and I'll be happy to get to your request. So we begin our morning with U.S. equity futures trading to the upside. Got the Dow futures up 93 points, NASDAQ's up 97, S&P futures are up 18, and the Russell futures are up 12.5. Now, each of you know out there, that yesterday we had that one-day rate of change below minus 10%. If you're listening on the show, it should be no surprise to anybody that futures are trading higher. And we'll take a look at those charts here. Overseas last night in Asia, we had a mixed bag. The Nikkei was down by 99 bucks, 0.25%. You had the Shanghai. That was up 2.5%, 91 bucks, 2% for the Hang Seng. We'll take a look at those charts as well. That was a 400-point move. The FTSE is lower this morning. The DAX is up higher. The DAX, I think, maybe towards its session high of the day. And if it does close that way, you should expect the NASDAQ 100 to do the same thing. In the commodities area, we've got gold, silver, and copper are trading higher. Gold's up 7 bucks, silver 14 cents, copper's up 12 pennies. Natural gas is basically flat out there, and light sweet crude is off 30 cents, printing out, excuse me, at 71.38. 10-year and 10 years up 2 ticks, and the 5 ticks, and the 30-year is up 2 ticks out there. You've got all the commodities, all the soft commodities: wheat, soybeans, soybean meal, corn, coffee, cocoa, lean hogs, sugar, and live cattle, all trading to the upside this morning out there. But let's begin our day simply by trying to understand what's going on across the board, what's going on in Asia, what's going on actually Asia and Europe this morning. So we're going to really start this show here the way that I start the newsletter out. If you give me a moment, we're going to flip back over now to my white background charts. We'll be flipping probably back and forth. Change your window. Give me a moment here. And you'll see 5 different panels. First one on the left-hand side is a Shanghai. So at Shanghai, remember all that stimulus? I mean, this was a rocket ship from September 19th all the way up to that trading session of October the 8th. And you can see the top was identified with that TD9 count top out there. And typically you get a top, but what does it do? It will take price back to that oscillator and change line. Well, that's in fact what happened here. The cool thing about this pattern, why does this pattern work? Where the top will form on bars 9 or bar 10, 8, 9, or 10, and bottoms the same way out there. Why does this work? I can only imagine, if we just kind of take a look at possibly track and field, that this is a sprint. And if you sprint, I don't care whether you're the fastest man in the world, you're running the 100-yard dash. When you're done with that 100-yard dash, you're pretty much done. You need to rest out here. So this is the market's 100-yard dash, no matter what you do, whatever time frame that's out there. It doesn't work all the time. Sometimes there's more energy to keep running further, and that tells you about a still strong upward momentum move out there. In any event, right now what we have that Shanghai index above the green oscillator and change line, so that's a bullish condition, outright bullish condition, and price is going to go straight in inside that swing point from back on, October the 8th out there. So it's going to go target, or it should target that high. The high of that candle session is up at the 38.51 level. If we take a look at the Hang Seng, the Hang Seng has really been trading in a sideways consolidation since the middle of October out there. Now, if price can close above 21,058 tomorrow, this evening and into the early morning, if price is able to close above that, trade above that, then that's going to tell us that price is ready to resume its move to the upside. Until then, we just have a sideways consolidation. If we take a look at the Nikkei 225, the Nikkei 225 had this little island top pattern had formed out here after wave number 7, and that most certainly took price lower. Right now, we are trading above her. It is trading above her. It closed above its green oscillator and change line for 2 consecutive sessions. My assumption is that it's going to go tackle this high, and it possibly, if it closes above that high, would then trigger an A to B equals CD pattern to the upside. That high being 42.5734. In the case of the FTSE over in the UK, gigantic rally started off yesterday and then just simply gave it up. This red oscillator and change line for the FTSE is the key critical level of resistance at day's end. We're trading with inside yesterday's candle out there. We're trading below its close. We're trading inside the TD9 count bar. That's bar number 8 from October 31st. And today's, if price were to close below 81.5963, that would tell us that price is likely going to target that TD9 count bottom pattern out there. In the case of the DAX, as I mentioned, it's got a directional correlation between the NASDAQ and it. And so here you can see we're trading right now up towards the high of the day. We're still trading inside of yesterday's bar, and that says that the pattern that's in place is likely to continue. I would say as long as price is below that green oscillator and change line, that would be to the downside. But not today, not right now. In fact, price might go up and again tag it as it did yesterday and perhaps reject it. Now, price closed above that level being 19,392 or so. Then that would tell us about a move to the upside out there, possibly retargeting its all-time high. It does have a Rhodes momentum indicator topping pattern out there. So that's what's going on. We take a look at the international markets. Why don't we move over into the currencies, see what's going on there? And give me a moment. Hopefully it pops up on our screen. So the U.S. dollar index, gigantic move to the upside yesterday. I'm not showing the U.S. dollar index chart, but you know what I'm talking about. If we take a look at the euro, which crushed through its red oscillator and change line, negated a TD9 count bottom, that would have been telling us that they get ready for the euro to just crush it to the downside. However, we've got the weekly chart below, and the weekly chart shows that price found support and may have bottomed at its breakout level, and that's at 1.071. That's going to be important come tomorrow. So what we should see, at least today, is we should see a rally up into the daily oscillator and change line, 1.08. If we do that, as we continue to do that, that'll put weakness inside the dollar. In the case of the yen is weakening further because it's trading above its green oscillator and change line, so that puts a little bit of strength in the dollar. And right now, the Great British Pound is taking on that oscillator and change line as well. As long as it remains above it, that'll go ahead and move higher. The dollar will be weaker. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. You know what I'm going to do here, because I didn't do a 8 o'clock update, just to give you an overview again of what instruments are doing out here, and then we'll start getting into the details. We're going to move over to the black background charts. We're going to take a look at my 9-panel market update chart. So if we take a look at the ES Mini here, we'll take a look at the details about what's going on, under the covers. But the ES Mini is targeting its 1-to-1 A to B equals CD price projection. That's up at the 60-12-75 level. It's trading above all resistance, with the spot VIX index being below its 50-day exponential moving average of 50 days at 1885, and we're trading right now at 1558. If we take a look at the NQ closed above profile resistance yesterday. It's going to go target 261.50. I'm not saying to sell the ES or the NQ. As it gets to those levels, you'd really like to see a bearish reversal candle to confirm that. In the case of the U.S. dollar index, there's no topping pattern. It took out its TD9 count top yesterday. It's trading above profile resistance. It is trading lower. So if it does continue to trade lower, you want to watch the first level of support, which would be 104.26. In the case of gold, it very likely has bottomed. Price came, now it doesn't have a bottom pattern other than getting back to breakout support. When you get, and then we're trading inside the bullish structured weekly profile, the buy zone. Last evening, we got down pretty close to testing the breakout level. The actual low from last night was down at 26.50.30. 26.45.30 is that breakout level. So you're close enough for Stevie. We should see a further rally. Silver's done the same thing. Now, silver's actual low yesterday was down at 30.96. 30.94 was is the TD9 count breakout level. So I believe both of these are likely to rally. Of course, with the U.S. dollar index moving lower, that should aid it a bit out there. Is it a bottom? Is it a significant bottom? I don't know the answer to that question, but I do believe it is a bottom, and it's likely to trade higher. In the case of gold, the resistance level is really, the first one's going to be at 27.30. We'll take a look at the daily gold contract because the oscillator and change line may get in the way of where the next resistance level is. Light sweet crude made its way up to its sell zone of its profile. That sell zone between 73.02 and 75.36. Natural gas has a ABCD bottom, but it also has a Rhodes Momentum Indicator bottom. So I think it's got two bottom patterns out there. Now, what it needs to do is it's only rallied right up into the level where a counter trend move would end, and that is a center. No, I take that back. It's just dealing with resistance. It's bearish structured resistance zone, the sell zone, I should say, at 2.808 and 2.866. And finally, a 30-year Treasury, that's going to need a bullish reversal candle to confirm any kind of a bottom. We don't have that. Likely to head lower out there. So overall, that's what's going on with the markets. Most people that turn in at 11 o'clock. It's one of the first things that we do out there. So now let's move off of this. Well, no, I tell you what. Here we can take a look at, because I had mentioned this during the just kind of during the opening out here, and this is what is this you're talking about, Stevie? What this is the S&P chart up top. Down below is the one-day rate of change of the spot VIX, and that's at the bottom panel. And the center panel is just simply the VIX with the 50-day exponential moving average line on that. When we get one-day rates of change below minus 10%, yesterday's one-day rate of change ended up being a total of minus 20.60%. Does it matter if it's way more than 10%, or does it give you even more momentum or anything to the upside? The answer is no. A bottom pattern is a bottom pattern. It really doesn't. So what we've got out here is, if you take a look at the other green arrows, they don't always work. It always concerns me a bit when we're at highs and that pattern forms. Rather it be where the market is pulling back, where you've got a retracement. That's then typically more likely lead to a higher high out here. But we are trading this morning in equity futures above yesterday's high, so it doesn't appear that is the problem that we've got. In the case of the New York Stock Exchange, its advanced decline oscillator, it closed just above zero yesterday. It had to work out. So if we step back for a moment and we take a look at the reaction of the market to the Trump victory out there, it almost didn't matter who was the victor yesterday. We know that the markets had got into oversold condition. Had been stuck in oversold condition for a few days out there. That's when you get to the minus 150 level. So really not a surprise that the market would have taken up. I think regardless of who won, that was really the signal that was coming from us. From the charts out here. So if it closes above that zero threshold level today, stays below the 50-day exponential moving average out here, that's the VIX, then when I say above the zero threshold level, I'm referring to the advanced decline oscillator. Again, that's the difference between the 19 and 39 period of its exponential moving average of the advanced decline line itself. So I know that sounded confusing, but Stevie's a little tired out here. In any event, just simply, if we get a close above that zero threshold line, that tells us that buyers are the ones that are in control of the general markets out there. So let's move off of these charts here, and let's go take a look at the intraday NQ chart. So if you give me a moment, we'll change it over back to the white background screens. Hopefully Stevie has this under control today. And up in the upper left-hand side, you'll see the NQ. Now, I don't have the A to B equals CD pattern written in here. We've already taken a look at that. We've given you the price objective out there. And what we have here is we're only in wave number F. That's letter 6. So there's no topping signal. So the NQ is suggesting it should move higher. Now, the confirmation of that is really going to come from the 5-hour time frame chart. It is now in, this at 9 o'clock, so we've got about what do we have, about 36 minutes from now. This is going to go ahead and complete, this being the NQ's 5-hour time frame chart. This is going to complete a TD9 count top out here. And that says that we could see retracement. You could even see retracement back to its oscillator and change line, currently printed at 26.90 out there. However, if after 9 o'clock, now the next candle is not going to close until 2 p.m. out there, but if after 9 o'clock prices trade above its high, I gave you what the current high is, but that might not be it, might be a higher high. But right now at 824, that high is at 29.99 and a quarter. Now what's interesting here is the 4-hour time frame chart had a TD9 count top that went ahead and completed at 2200 hours last evening, and it was negated right away. So by 2 a.m., its next 4-hour bar, it negated that signal out there. So it's the only thing that I see of interest from a topping signal is going to be the 5-hour time frame chart. The 10-minute chart has got a TD9 count and Rhodes momentum indicator top out here. What you want to watch level here is 29.67. So if you're really intraday trading out here, what you're going to want to watch is 29.67. That is where a counter trend move to the downside for a 10-minute time frame would come to an end if that's all it is, just a counter trend move to the downside. If instead price on a 10-minute basis closes below 29.67, price is likely to go target the 29.34 level. That's its TD9 count breakout area for its 10-minute time frame. Let's do the same thing here for the ES Mini. The ES Mini more tied to the one-day rate of change on the spot VIX out here. So let's go see what it is doing. It's trading up 15 points right now. So just let these populate. Again, I don't have the A to B equals CD pattern written in here, but we already covered that. We're trading above profile. We're trading above yesterday's high. So as of 8:25 in the morning, that all looks good. Now we're looking for these intraday charts to complete here to see if there's any kind of a topping pattern. And the ES Mini for its 5-hour time frame is following right along. It's going to complete the bar following bar number 9. You have a completed pattern here at 9 o'clock this morning. If it does move lower, its price target to the downside right now would be 59.05. I don't see any other topping patterns out here. Let's just we're going to do it. I'm going to go to pull up all of the 5-hour time frame charts. Let's see if we've got any kind of synergy here. So I'll have that pulled up for us when we get back from this break. Of course, if you've got something you'd like me to look at, you can give me send me an email, steve@tfnn.com. In fact, what we're going to do here, we'll take a look at all those 5-hour charts. Then we're going to take a look at the IWM for Hector and Patty. So we'll rip that apart. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a look at the 4-5-hour time frame charts for the equity futures. We've already identified for the ES and the NQ that they're going to go ahead and complete TD9 count tops as we come into the 9 a.m. hour out there. That should lead to lower price. The oscillator and change lines would be their first targets to the downside. The Dow completed its 5-hour TD9 count top. It did it earlier this morning, did it at 4 a.m. And here we can see that price moving lower. So for the Dow equity future contract, it's already given us the number to be paying attention to. And that's going to be the high from 4 a.m. If price is able to close above, starts trading above 44.017, that tells you that its rally is ready to continue out there. Otherwise, it simply may want to do a bit of a retracement. And if we take a look at the Russell 2000, the Russell 2000 could form by 9 a.m., could form a Rhodes Momentum Indicator top out here. Very close to generating a bear sash candle, a bearish engulfing candle. So we just have to wait for 9 o'clock to show up another 29 minutes from now. So it does look like we have a unanimous agreement here with regard to some type of topping pattern on the 5-hour time frame chart. So where could this pullback, should it unfold, take us to? 59.04 in the ES, 26.87 in the NQ, 43.385-ish. Remember, these numbers are going to be lower. I'm just giving you the range right now to the downside. And finally, for the Russell 2000, be the 20, this is called 23.62 level. That's the beginning of the buy zone for the 5-hour time frame chart. So that's what's going on there. Now, Hector would like to take a look at the Russell 2000. He'd really like to take the IWM. So we're going to do that. We don't have any requests in other than his, so we'll spend some time really taking a look at that. What I mean by that is we're going to first start off by looking at the intraday charts for the, well, really all multiple time frame charts for the Russell. Let's start with the largest time frame. So when prices trade in above a green oscillator and change line, conditions are bullish. If we take a look at the monthly time frame chart, you'll see we're trading above the highs from the last 4 months. We're trading above the green oscillator and change line. Where do we think price is going to go target? It's going to go target the 24.60.80 level. It's going to go target the high of its TD9 count bottom pattern that had formed out there. So that's going to be the next resistance level on a monthly time frame. The weekly time frame, we're trading above profile resistance. We're trading above its green oscillator and change line, all out bullish. Now, I do see a potential wave number 7 top out here. Let's take a look at this. And this is just from the data that I've got for the December contract. If I put the continuous up, I might get a different count. So let's not rely on that. But at least what we can say about the weekly chart is price is going to continue to move higher on the daily time frame chart, or should continue to move higher. Now, I'm not talking about intraday stuff, so I'm not talking about the noise, because there's definitely noise out here on the Russell 2000 equity future contract that says prepare for a retracement. It's not coming from the daily time frame. It's coming from the 30-minute time frame, and right now prices that are going to be at a key level, that's at 24.0180. Now it's 8:33, but at 9 a.m. if we close below 24.0180, a key level of support will have failed, and we likely then head down towards the 23.60 level, 23.48 to 23.63. 23.83 is going to be a potential area of support out there. That's coming from the 4-hour green oscillator and change line. Yeah, so we're seeing signs that potentially we're going to see some type of retracement early morning. That's all. I'm not saying this. I'm not at all saying this is a top. Those are not the signals that we have. But right now for the Russell, got to watch that 30-minute 24.0180 level there. So let's go take a look. So we know all this is signaling that we want to move higher. What Hector would like to nail down inside the IW, I'm going to go ahead and close this, and I'm going to switch back to my black background screens out here. So if you give me a moment here, we're going to do that. And what we're going to do is, well, you know what? Let's just stay here for just one moment. And let me pull up the IWM charts, daily, weekly, and monthly, and see what kind of signals are there, if anything. We were taking a look at the futures contract. Let's see if there's anything different here when we take a look at the IWM. So here we look at the IWM. We can see on a daily basis, we're trading above profile resistance, green oscillator and change line, full bullish breakout mode. In the case of the weekly time frame chart, we are negating a Rhodes Momentum Indicator top. We're negating a wave number 7 top out there. There's no topping signal, wants to move higher. Monthly chart, very much like the monthly Russell 2000. futures chart we looked at, it wants to go target its TD knockout breakdown level, its all-time high, 244.46. So it does look like the Steve, even though we're talking about an intraday retracement out here, that's where the IW really wants to target, which is the 244.46 level. Now that's all well and good, but what Hector and Patty would really like to know is what do the A to B equals CD patterns look like here? So we're going to go ahead and go over to the black background charts again. And we're going to try to answer that question. I'm going to start with the larger time frame. The reason I like to start with the larger time frame when I take a look at A to B equals CD patterns is the larger time frame gives you what the real trend is. And here, for the A to B standpoint, from the A to B line, we're starting with the March 2009 lows. So Hector, I go all the way back to March of 2009. The price there was 34.26. Now, we have the benefit of all of this price data, so it becomes easier for us to draw A to B equals CD patterns. Are there multiple A to B equals CD patterns that we could draw here? Absolutely. But the one that really sticks out to me is the larger one. Everything else would be inside this A to B equals CD pattern. And what we can see is that price has attained the 1-to-1 level. It actually attained the 1-to-1 level back here in 2021. And that was when it formed its high out there. And of course, that's the high that the other charts that we just looked at are telling us it wants to go tackle. Now, what we can also see here is along the C to D move, price is on the left-hand side of that line. That tells you that it's a stronger move. Now, it was pretty close to a 0.618 retracement. It was 55.85, so that's close enough for Stevie. But because price is along the left-hand side, what this is telling us, Hector, is that longer term, price wants to make a move up to 272.66. That is unless we see some other kind of major top or something take place. That's what the monthly time frame chart is telling us. So that's the bigger picture. The bigger picture is we're already at the 1-to-1 level, 234.82. We ran into resistance, so we got to watch that high. If price is able to take out that high, that all-time high, that's going to be resistance. Again, that all-time high number, if I can get my cursor there, is going to be 244.46. We get a close above that on a monthly time frame. Then we got 272.66, more likely to attain that level. Now, when we look at a weekly time frame chart, I'm just simply going to open this up. And here, because now, even if I go back to the 2020 lows, and we can't really draw that A to B equals CD pattern in because we haven't gotten up to its all-time high. But if price does take us out, that would be another A to B equals CD pattern to the upside. Now, we can take a look at what that looks like. But first, what I'd like to do, if you're looking for an A to B equals CD pattern on the weekly chart, well, then we've got to come to what's taken place since the bottom in the middle of October time frame. So the A point, that's pretty easy. It's going to be the low. That's going to be, this is the IW on that we're looking at. It's going to be the low from October 23rd, the week of October 23rd. Come on, work with us here. There we go. There's our A point. Our B point is going to be the next higher high that takes place out here. So you could choose this one right here from December 25th and a pull back into support out here on January 15th. So that would be, that certainly is one. I'm going to go ahead and take this one right here, and that's simply going to move to, so either one would be just fine, but I'm just simply, again, this is where it gets subjective. That's what I love about the TD9 count pattern, because it's breakout level, breakdown level. It is not subjective at all. It is 100% objective. When Stevie comes back from this break, I'll have that weekly A to B equals CD pattern drawn in, which has which is going to have a price projection of, well, going to have to wait till I get back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we've taken a look at the IWM. This is for Hector and Patty, and we're looking at the A to B equals CD pattern. So I've drawn in one because there are several that we can draw in here, and you can draw in all of them. I'm not going to go ahead and do that, but here on the weekly time frame chart, the B point, which formed the week of March 25th, won their 116 million shares. It was passed with 174 million shares. 274. So it's a confirmed A to B equals CD, period, no matter which B point we use and which C point we use out here. This one has a price projection of 241.50 out there. Now here we can see that price is trading on the right-hand side of that C to D leg. It does have a 41% retracement, so it's really a battle here. When you do a 0.382 retracement, which basically this is, odds favor you're going to do more than a 1-to-1. But you pay attention to what side of the C to D line. See, it's very important. You got to maintain the same angle. A lot of people don't do that out there. My suggestion is really do that, because if you use these tools, you're trying to get the marker. You're trying to interpret the message of the markets out there. And so in this case here, it's saying, maybe all this is really going to do is a 1-to-1 move up to the 241. So you got 241.55 as one price target. Above that, you'd have 272.66 coming from that monthly time frame. Now we get into the daily time frame, and it's just a hodgepodge of all kinds of A to B equals CD patterns. What I'm trying to take here, one of them would be the one that came off of the August lows out here. Again, we're looking at a daily time frame. The B point out here is on the trading session of August 26th. Volume there was 24 million shares. Now when price passed it, closed above it, it was with 35 million shares. So 35 million shares took out a day that had 25 million shares. That's a confirmed A to B equals CD. Well, you can see that yesterday we got all the way up to the 1.272 level on that A to B equals CD pattern. So the next price projection level for a daily time frame would be up to 245.87. Well, 245.87 is going to get us up to the 241 on the weekly. And if we do close above those levels, again, it's really going to be all about closing above the November 2021 high out there. And again, for the IWM, that was at 244.45. 146. We get above that, then what you're looking for, though, so you got these A to B equals CD patterns. On the daily time frame specifically, what you'd be looking for is some type of bearish reversal candle. If that were to unfold, then that would tell us that price should then pull back to support. You'd have a top, price would pull back to support. On the daily time frame, that support level, I don't have an oscillator and change, and while I do, it's on another screen. Give me a moment here just to take a quick, I don't. I got rid of that. I would say right now it'd be the top of the profile, and that'd be a 227.17 out there. So those are the A to B equals CD patterns that I see out here, Hector and Patty. I think it's just easier first start with the longer term time frame so you know what's really unfolding, and then you can subjectively do all these A to B equals CD patterns. What you're trying to do is on that B to C leg, you're trying to find a retracement of at least 38% out there. If you don't, it's really kind of a suspect A to B equals CD pattern out there, maybe some other pattern that's going on. And preferably when you're choosing those B points, when you're being a little bit subjective, what you'd like to find, so for example here, even on the weekly chart, what you'd like to find is you'd like to see your B point that you use, you'd like to see that pass with volume. Right? Because then you'd have confirmed by volume A to B equals CD pattern. Doesn't guarantee that the pattern will unfold the way that it's drawn in there, but it increases the odds versus getting a B point that's passed with light volume out there. So hope that helped you out, Hector and Patty. Hope it helped everybody out. That's kind of a decent class, if you will, on the A to B equals CD pattern. We do have one more request that came in. Thank you to Dan. He wrote in by email, and I appreciate that. He'd like to take it arm holding. So let's move over to Stevie's white background charts, see what kind of signals are being generated by the daily, weekly, and the monthly time frame. So the daily time frame shows a wave number 7 top that formed out here on October 14th. It was confirmed the very next day. That top took price all the way back to support. And that was its bullish structured profile. That was at 140.26. A couple of days ago, price closed, this was on the 14th, price closed below that breakout level, 139.11. Of course, Stevie's rule, it should be your rule too. You need 2 confirmations, kind of like a 2-step authentication process out there. So you need 2 confirmations of a break of support or 2 confirmations of a break of resistance out there. What price is likely to do, because back inside the profile, inside the bullish structured profile, it should go target 146.98. Now let's go see what is ARM Holdings trading at in the pre-market right now. So at 847, 139.97 is out there. So it's actually pulling back to test support again. Watch 139.11. 139.11. If prices closes below that, and then we get below it again, you could be getting an A to B equals CD pattern downside. Let's check this out. The B point of an A to B equals CD pattern would be the day of October 24th. And the volume on that session was 5.6 million shares. It was passed with 3.2 million shares. So even though this has triggered an A to B equals CD pattern, it didn't cross that level with volume. It got below that swing point and below other support levels for only one day out there. So I don't think we have a confirmation of an A to B equals CD pattern. But if we do start closing below that level, again, that level being 138.40, and if you do it with more than 5.6 million shares, Dan, because you're looking for an entry point, then you've got an A to B equals CD pattern to the downside. So is it going to form that? I don't know. It should really rally towards 146.98. It's not doing that. Right now it's about 140.38 was the last trade that fired off. We'll look at an intraday chart, like a 15-minute, 30-minute chart, see if there's any signals there. Weekly time frame chart. TD9 count top brings price right back to its breakout level, 108.69. That's suggesting to you and I that it's bottomed. However, price was below the bottom of its bullish structured profile for more than 2 consecutive sessions. And what that tells us is that where the 152.04 level, the center of that bullish structured profile, has held as resistance. So we've only seen a counter trend move on a weekly time frame. What you want to do, if you're trying to get into a position, you want an entry point into a position. Dan, I don't know what time frame it was. If you're looking for a longer swing trade, I don't know what that time frame is, but if you're looking for a longer term trade out there, which is really what the monthly time frame chart would suggest that you should do, the reason is because there's no topping pattern out there. So there's no, that you can see a TD9 count top, which is bar number 7 that formed that top out here. So this suggesting no top, and maybe longer term, what this is telling us, it wants to get back to those highs out here. But that's not going to be a triggered there's the piece of information that you need to put that piece of the puzzle together is a close above 152.04 and a close above it on a weekly time frame. So at this stage here, I'm going to say hold off for an entry point. I did say we take a look at some intraday charts out there. So let's see what we have here. On a 15-minute basis, I don't have I take that back. Certainly there's a sell the D point pattern. The price found support at 144.21. Again, this is a bearish structured profile. The move lower, if it's only a counter trend move, would find support at 143.72. Well, it hasn't done that, right? Well, at least in the pre-market, 140.38, 140.25, just firing off. Now, that takes us beyond, on a 15-minute time frame chart, takes us beyond its breakout level. The next breakout level will be 138.98. Now, that's a 15-minute time frame. Let's see what we have on the 30-minute chart out here. Don't pay attention. Well, that is the oscillating change line. That's correct. What do you have here? What do we have here? I don't think this was a sell the deep point top. So let's close it out like this, Dan. I don't see the re-entry point just yet. Let's wait to see how today trades, and maybe hit me back tomorrow. I'm going to also do 8 to 9 tomorrow morning. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. Thanks so much for joining me. Hey, if you are listening at the normal time, that would be between 11 and 12. We are doing this show between 8 and 9. I'm also going to do tomorrow's show between 8 and 9 as well. So please tune in there, or in the early morning, send me some emails with any requests that you have. Let's finish out the show. Take a look at the 30-year Treasury in gold. The question on the 30-year Treasury that's coming in from the den from YOY is, does it look like this is forming some type of a bottom out here, a swing low? And the answer to that question right now in the daily time frame chart is no. Price negated its TD9 count bottom pattern yesterday. It's trading, it needs a bullish reversal candle to confirm a bottom. We're trading below the red oscillator change line. All rallies have ended at the daily center of that profile. That's where 118, 18, or 19 out there. So now, what's going on a short-term basis on a trader? If you're just simply a day trader or what have you, you could take a look at the, well, that's not what I wanted. Sorry about that. It was not what I wanted at all. If you take a look at the intraday charts, look, you got a 2-hour chart that has formed a bottom pattern out there. Rhodes momentum indicator bottom. It's struggling to get above resistance. If it can close above on a 2-hour basis, the level of about 116.11, then it should rally further. Here's the 60-minute time frame. 60-minute time frame is going to show a Rhodes momentum indicator bottom still struggling to take out its resistance level at the 116.11 area. We take a look at a 30-minute. So from an intraday standpoint, YOY, the answer to your question is, yeah, there's tradable. There's, you can trade both to the upside and to the downside. On 30 minutes, you got a TD9 count bottom, a close above 116.12 should lead to a further rally out there. But with regard to a larger swing trade, I don't see it at the moment. So I hope that helps you out. Lastly, let's go take a quick peek at gold out here. Goldilocks. What do we have? We know that it may have bottomed as price got back earlier this morning to its breakout level, 26.45. If we take a look at the patterns to watch right now on the 2-hour basis, a close above 26.87 is going to be bullish. We're running into resistance on the 1-hour basis. Top of its profile is up at 26.93. On the 30-minute time frame, you're going to get a TD9 count top that's likely going to go ahead and form at 9:30 and complete at 10. So we may see a retracement start as the cash markets open up. Folks, thanks for joining me today. Have a terrific Thursday. I'll look forward to seeing you tomorrow on Fantastic Friday. Be safe out there.